A new report from the New York Times suggests that the board of directors was blindsided by CEO Elon Musk's tweet about the company going private last week. Joining us now is Bill Cohan. He is a CNBC contributor, special correspondent as well with Vanity Fair. Bill, welcome back. It's good to see you again.
Hey, Scott. Great to be here.
What do you make of this latest installment of the reporting now? The Times saying, oh, you know, the board had no idea, or at the very least, they were blindsided by the fact that he was tweeting what he did.
Hey, Scott, I think the whole episode for the last, close to a week or 3 or 4 days now has been totally irresponsible on Elon Musk's part to tweet out $420 offer, quote unquote, fully financed, not let the board know, not have any commitment letters, not have any bridge loans, not have any highly confident letters, you know, sort of backfilling, saying I've got Goldman working with me, I've got Silver Lake working with me, which isn't even an advisory firm. It's a principal private equity firm, obviously. You know, Wachtell working with him, maybe the Saudis. You know, I interpreted what the Saudis said is they would be fully committed to financing my offer if I decided to take it private. You know, completely irresponsible. On the other hand, look, I love Elon Musk. Thank God for Elon Musk. Thank God for Tesla and what he's doing and boring through creating tunnels and going to the moon and going to Mars, whatever. I think he's great for America, great for entrepreneurship. But there are rules that have to be followed when you're talking about a growing private transaction. And this is just completely and utterly irresponsible.
He says in his blog post of the 13th, Monday, and I'm going to quote here, I want your reaction to it, because I think this is really interesting. To be clear, when I made the public announcement, just as with this blog post and all other discussions I have had on this topic, I am speaking for myself as a potential bidder for Tesla. He makes it seem as though he's speaking as an investor, the principal investor, not the CEO. How can that be possible? He's the founder and the CEO, and he put something out on Twitter.
And the largest shareholder, right? I mean, he's backfilling, Scott, because obviously he was told very quickly by smart attorneys that he may have violated SEC rules, and he's trying to, you know, say, okay, well, I didn't really mean that. That was just a preliminary idea. Any offer I would make would be, of course, fully financed and fully filed with the SEC, and going private transactions are very complicated and highly scrutinized. Look about, you know, Michael Dell taking his company private many years ago and how highly scrutinized that was. So he's obviously realized he made a big mistake. He may have violated SEC rules and the laws of the land, and he's trying to backfill, and maybe that'll succeed. I don't know.
You're not a lawyer, but you think they go after him?
If I were an SEC commissioner, I would make a big deal of this, yes. If I were head of enforcement at the SEC, yes, I'd make a big deal of this, but I'm not a lawyer. I don't even play one on TV.
That's why I prefaced it the way I did.
Yeah, completely irresponsible is my reading. Completely irresponsible. As a former M&A guy, outrageous.
What are the chances you think that this go private transaction actually happens?
Does less than zero mean anything to you?
You really believe that?
Less than zero, Bill? Really?
You really believe that?
Well, look, first of all, you know, you had that very interesting discussion about the markets reaching new highs, and Tesla has been a Wall Street darling for a long time now. Its stock is incredibly highly valued, right? The multiples are infinite because there's no EBITDA, you know, there's no earnings. So you're talking about, I don't know, 60 to 70 billion dollars of equity value, 10 billion more of debt. I don't think there's enough risk capital in the world that expects a return that could possibly take this company private, even if he doesn't take it, you know, even if some of the shareholders roll over, which, by the way, I do not understand either, because there are rules about that as well. I mean, maybe the Saudis or the Qataris or the Norwegians or somebody is just willing to own this company outright without getting any return on their investment for a very long period of time. Maybe there is that kind of dumb capital out there. I just don't see it. No self-respecting bank in this country is going to provide him a highly confident letter or a full commitment based on the fact that the EBITDA has been negative. They've had manufacturing problems. The capital expenses are huge here, and the highly priced nature of the stock. And he's got to pay a premium on top of that. Forget it. Not going to happen.
And the other thing is he cuts off another avenue for a capital-intensive company of being able to raise capital. Now, debt's less expensive, less dilutive than equity, but still, there's only so much debt he could raise in this company before those coupons go through the roof. So he's got to raise equity, you know, through eventually. But to me, this is
he's got the best partners already. The public markets are the best partners for him.
Right.
Well,
kind of dumb and willing to give him plenty of money.
You disagree?
You're right,
John,
Bill.
with
But
Bill?
what he's got is also the performance issues where he has to address those every quarter, even though he played very nice this last quarterly call. But to your point about less than zero, I know you don't really mean less than zero. You probably mean very
No.
low percentage chance. But
Close
since
to
it's,
zero, yes.
Since it's not an LBO, since he really wouldn't be taking everybody out, at least based on what you and I have heard, neither of us really knows exactly what Elon Musk might be offering to the
Well, it
folks.
would be an LBO, it wouldn't be an MBO.
Yeah.
Big difference.
Yeah, it wouldn't. Steve's right. So in other words, people, if they indeed do hold on to this, he doesn't have to take out all these folks. He doesn't have to, basically take all these individuals out. A lot of them will probably take the money and run if indeed there was a $420 takeout. But I got to believe that there's some chance better than zero.
You should also, Bill, before you answer, I mean, in full disclosure, you and your brother bought calls.
I have call spreads. I have the 380 calls versus, I believe, the 405s. And I think Pete has the same 380s, maybe versus a higher
four
strike.
and a quarters.
Okay, versus.
And the one thing I would address to Bill would be, I don't know that you can call the Saudis dumb capital. That was the expression he used. He says,
Well, that's why I don't think they do it.
Well,
I mean, that was being facetious, tongue in cheek.
Bill, let me ask you this. Doesn't it make some sense that when people talk about diversification, and in this case, the Saudis getting away from oil and having some exposure here in this particular area to get away from oil, doesn't that make some sort of sense? I mean, to me it does, because why wouldn't they want to diversify away and move right to exactly their competition going forward? So I don't think it's a zero chance, and I don't think it's dumb money if this were to happen. Obviously, this is a business that Elon Musk, and all of us know about this, would rather see it go, and he's been talking about this. Everybody keeps saying this is very new. This has been going on for years, the idea of going private, because that way they can become more efficient and don't have to worry about every quarter's numbers and some of these numbers they have to put out in terms of production.
I think the...
Hold on, let Bill answer. Bill, answer, please.
Well, right. So, look, people have been doing going private transactions, LBOs, for like my professional life. That's 35 years now. So, but usually when companies are talking about that, they're trading at 4 or 5 times EBITDA. They don't have a lot of debt. They don't have production issues. They just feel like they're not valued properly in the public markets. Okay, it's not because they want less scrutiny from the public markets. They don't feel like they've been valued properly in the public markets. The opposite is in effect here. Elon Musk is getting this huge valuation from the public markets. He's getting public shareholders who are constantly happy to give him more and higher valuations without any kind of EBITDA or net income. I don't think the Saudis are stupid. Exactly. That's why I think that they won't do this. But I mean, if you want to, take a bunch of the public shareholders out at some high valuation and have stub equity trading, I mean, I suppose that could happen. But you're not going to probably lose your reporting requirements as a result of that unless you're under whatever it is,
Bill,
500 shareholders. I can't remember the laws.
Bill, by the way, I know it's just a drop in the bucket, but the Saudis already proved that they have interest in this based upon the $5 billion they put in there already, right?
Yes, and believe me, this would be consistent with MBS's plan for the future that he's made so much publicity about. I mean, yes, but I mean, I have to assume that even with all the wealth that the Saudis have, they do want a return on their investment. And maybe they're going to put in more equity and they'll use it to buy out shareholders that don't want to participate. But is that the same as a complete buyout? Is that the same as taking it off the publicly listed stock market? I don't know that can happen.
What about
if that happens, that is a highly scrutinized transaction that has to be approved by the SEC.
What about the notion, and Sorkin took a stab at this today, and a good one, at the dissemination of information like this via Twitter, whether it's going to cause other executives or high-ranking officials to, not necessarily the president, but to take pause before you put stuff out on Twitter here forward because of the possible ramifications?
I wouldn't do it if I were a CEO. I wouldn't do it for a second unless I was also attaching a fully vetted press release along with it that said that in this case I have a fully financed offer, I have commitment letters from these banks, I have bridge loans from these funds. I mean, whatever it is. Otherwise, I mean, 420 fully financed. Forget it. That is a risk a CEO should not be taking.
The other issue is if you look at sort of motive in all of this, Bill, whether we believe or not that was ready at that moment to take the company private, the battle that he's had very publicly with short sellers and how that shaped his thinking and motivated him at that moment to do what he did on Twitter.
Well, I mean, I don't know his motives. He's not talking to me, but obviously that caused the stock to pop. It caused the short sellers to experience a lot of pain. That is not fair or right, and he should be, fined / prosecuted for that, in my view.